Dear students, welcome to another video of my channel. I am taking today financial accounting, a practical question on loss of profit policy calculation under the chapter Insurance Claim. Myself, Dr. Hemant Kadunia, Assistant Professor, Department of Accountancy and Business Statistics, Sri Samaliaji Government College, Mandphia. And if you have not subscribed my channel till yet, please subscribe and share. In the playlist, you will find out the following subjects. You can get videos of contents of these subjects. So let us start the practical question of loss of profit policy. This is the question on your screen. The premises of private limited company was partly destroyed by fire which took place on 1st June 2020, and as a result the business was disrupted from 1st June to 31st October 2020. It means there was a disturbance in the business, downfall in the business from 1st June 2020 to 31st October 2020. You can calculate the month of period: June, July, August, September and October. It is 5 months. It means the indemnity period of the question will be 5 months if it is shortened than the period of policy. Accounts are closed on 31st March every year. The company is insured under loss of profit policy for rupees 7,50,000. The policy taken is 7,50,000. The period of indemnity is specified in the policy 6 months. Now see, the period of indemnity is 6 months as per the insurance policy, but the actual dislocation were from 1st June 2020 to 31st October 2020 for 5 months. Then we will calculate only for 5 months the insurance claim. From the following information, you are required to compute the amount of claim under the loss of profit policy. This question, as I taken, a very important question, because it will take all the 10 steps of the insurance claim policy calculation. You will find it is very beneficial for your exam. So look at the question and please be with me to the complete video. Sales for the year 2019-20, for the last accounting year it is 40 lakh. Net profit for the year 2019-20, 2,40,000. Insured standing charges 4,80,000 for the last year. Uninsured standing charges 80,000. Sales during the period of dislocation means disturbance period. Sales 1st June 2020 to 31st October 2020. It is 8 lakh. Annual turnover for 12 months immediately preceding the date of fire, 1st June 2019 to 31st May 2020, 44 lakh. Increased the cost of working 1,50,000. Saving in insured standing charges 30,000. Reduction in turnover avoided through increased cost of working, it is 4 lakh. And last information is sales during the 1st June 2019 to 31st October 2019, 20 lakh. Owing to reasons acceptable to the insurer, the special circumstances clause stipulates to. There are two more information: increase in turnover by 10%, that is trend in the sales, and increase the rate of gross profit by 2%. Means we have to increase the gross profit percentage by 2%. So let us start the answer part. We have 4 sales. First one is sales for the year 2019-20. It is annual turnover, and then this sales during the period of dislocation 1st June to 31st October, it means only for 5 months, 8 lakh. Annual turnover, it is for 12 months just preceding the date of fire, 44 lakh. And last sales, that is from 1st October to 1st June 2019 to 31st October 2019, 20 lakh. Now we write this in the following manner: short period for 5 months. We have given in the question sales during the period of dislocation, that is from 1st June 2020 to 31st October 2020, it is given 8 lakh. Sales during 1st June 2019 to 31st October 2019, that is given 20 lakh. And two cells are given for 12 months, that is cells for year 2019-20, 40 lakh, and annual turnover for 12 months just preceding the date of fire, 1st June 2019 to 31st May 2020 for 44 lakh. Now, with the help of these four cells, we will start from short period cells, that is dislocation cells, and you see 1st June 2020, just before 1 year, 1st June 2019 to 31st October 2019, the cells were 20 lakh. Means during the last year, the cells were 20 lakh, and during the current year, it is cells is 8 lakh. It means there is a downfall of 12 lakhs. Now, we have to calculate like this. First, we have to note down the indemnity period. That is, in short period, that is given 6 months. And actual dislocation period, as it is given 1st June 2020 to 31st October 2020, that is for 5 months. So, the short period, whichever is less, 6 months or 5 months, whichever is less, 1st June 2020 to 31st October 2020 will be indemnity period. Now, we have last year cells for short period 20 lakh. It will be known as standard turnover, means 1st June 2019 to 31st October 2019. Last year short period cell, 5 months cell will be 20 lakh, and as per question last information, that is increase in turnover by 10%, we have to add 10% of 20 lakh trend, 2 lakh will be added. The final result will be adjusted standard turnover 22 lakh. After this step, from 22 lakh, you have to deduct 8 lakh, which is dislocation period cell. Short cells we have to calculate, adjusted standard turnover as we calculate 22 lakh, and less cells of actual dislocation period 1st June 2020 to 31st October 2020, that is given 8 lakh, 22 lakh minus 8 lakh, it is the final answer is 14 lakh short cells, the important answer. If there is any error in any step, you will wrongly calculate the other steps in future. Now, the fourth step is gross profit ratio equals to net profit plus insured standing charges divided by sales of last accounting year into 100. 2,40,000 plus 4,80,000, that is given. I see you. I look this. Yeah. Sales 40 lakh, net profit 2,40,000 of the last year, insured standing charges 4,80,000. That is 2,40,000 plus 4,80,000 divided by 40 lakh into 100. That is 18%. The result. And after this 18%, the fifth step is adjusted gross profit ratio. Gross profit ratio as calculated in the step number 4 is 18%, and the last information of the question, there is an increase in the rate of gross profit by 2%. 18% plus 2%, you will get 20%. The final answer 20%. Now move to the next sixth step, loss of profit. Step number 3, answer is 14 lakh. Step number 5, answer is 20 lakh. Short sales 14 lakh into adjusted gross profit ratio 20%, the answer is 2,80,000. Now the next step is net allowable expenses. The answer is allowable expenses minus saving in expenses. Now you have to first calculate allowable expenses. So these are the steps for calculating allowable expenses. You have to write least of the following of the 3 points A, B or C. A is additional expenses or increased cost of working. B is additional expenses into, in bracket, net profit plus insured standing charges divided by net profit plus all standing charges. And then C point is sales reduction avoided into adjusted gross profit ratio. Now from the question, first step, additional expenses, increase the cost of working 1,50,000, additional expenses or increased cost of working 1,50,000 I have noted down. Now additional expenses 150 into, look this one, sales is not required, net profit 2,40,000, please note down, and insured standing charges plus 4,80,000 divided by net profit 2,40,000 plus insured standing charges 4,80,000 and uninsured standing charges 80,000. The whole answer of this steps is 1,35,000. Now the third step is sales reduction avoided into adjusted GP ratio. Sales reduction avoided is given in the question. Look this, reduction in turnover avoided through increased cost of working 4 lakh, and GP ratio we have already calculated 20%, 80,000. So list of the 3 steps: A 1,50,000, B 135, C 80,000. List is 80,000. So you put here allowable expenses 80,000 minus saving in expenses is given in the question. This one, saving in insured standing charge is 30,000. So you note down there in the 7th step, allowable expenses 80,000 minus 30,000 equals to, the answer of 7th step is 50,000 net allowable expenses. Now the answer of 6th step is 280 and 7th step is 50,000. Add both in the step number 8. Loss of profit 280 plus net allowable expenses 50,000. Cross claim you will find 3,30,000. Here the meaning of plus minus sign means the step number 7 answer may be negative, so you have to deduct that time if there is the answer of 7th step is negative. So the gross claim we have found out. We have found 3,30,000. Now insurable amount we have to calculate. The formula of insurable amount is adjusted annual turnover into adjusted GP ratio. For annual turnover, you have to move to the question, the last cell which we have not used till yet, this one. Annual turnover for 12 months just preceding the date of fire, means 1st June 2019 to 31st May 2020. It is given 44 lakh. You will write here annual turnover 44 lakh, and then you should add 10% trend in sales of 44 lakh, 10%, 4 lakh 40,000. Adjusted annual turnover will be 48 lakh 40,000. Adjusted annual turnover into adjusted GP ratio, you will get insurable amount, that is 9 lakh 68,000. Now net claim, last calculation of the question. Net claim equals to, if insurable amount is greater than sum insured, here insurable amount is 9,68,000 and sum insured is 7,50,000, which is given in the question. You have to write formula, net claim equals to gross claim into sum insured upon insurable amount. Gross claim in the step number 8, 3,30,000 into sum insured 7,50,000 divided by step number 9, 9,68,000 equals to, the final answer is on your screen, 2,55,682. This is the question of 10 steps, all covered under this question. And please go through 2 or 3 times of this question. You will find the insurance claim profit policy calculation very easy and interesting. So thank you very much for watching full video. Thank you.